So Facebook has just come out. It has reported its third quarter earnings. Again, they've gone above and beyond what the consensus, what the estimates were really projected for Facebook. They have surpassed them. It has been an overwhelmingly sort of positive earnings announcement. However, Facebook pre-market Wednesday, the 29th of October, is actually selling off quite considerably. Facebook is down about $6.50. That translates to a little over 8% of the equity price being wiped off Facebook as at the close of Tuesday evening. Now again, Facebook is set to open up on Wednesday. At the moment, or the current market price after hour price is about $74 on this particular stock. Now, just because Facebook is selling off based on this earnings announcement, it is quite negative. Obviously, the news itself or what the investors and traders are saying is, look, this isn't as good as what the announcement actually intends it is. Just because it is going to be a negative gap down doesn't mean that you want to trade the bearish side straight away. The reason why, of course, is in my opinion, we have limited downside on Facebook. If Facebook does open up at $74, really the next support level comes in about $72.22. Now, in the way of earnings announcements which have come out, they've gapped down. However, the candlestick has been white. In other words, a very good learning opportunity for many people out there not to, of course, jump into bearish positions straight away at market open based off a negative or a negative gap down. All you need to do is have a look at Amazon and say to yourself, look, Amazon gapped down pretty much $30, $25 from about $300 down to $285, a little bit over $300. But you can see what would have happened if you jumped into Amazon at the market price, or at the market price when it opened. Since then, the past two trading sessions, it has actually rallied. Now again, if we take this one step further, most recently, if I just get out of that Amazon and pen drawing tool, all I need to do is bring up Twitter. Have a look at Twitter. Again, it gapped down to this open gap down here, about $42.50. I can get these right figures for you. It opened at $42.25 and it closed at $43.78. So during, of course, today's trading session on Twitter, it closed $1.50 above from where it opened. So if you entered into put positions based on the market open, you would be sitting underwater right now. Now the story, of course, continues for other stocks which report earnings. Now the best way to trade these companies once earnings are released is to let the daily candlestick play out, to analyze where the support and resistance levels actually are, or where the next support level is if current support breaks, and of course set the trade up to make sure it is at least a 2-to-1 risk reward based off that candlestick on the daily. Now at the moment, the level which I'm paying attention to on Facebook is down here about $69.94. I want to make sure that if Facebook wants to continue the sell-off, it needs to prove itself to me. Price needs to, of course, confirm that it wants to move lower. $69.94 is the location which gets me excited. I've got two targets on Facebook if in fact it continues to sell off. The first target is about $68 a share. The second target comes down here much closer to $63 a share. Now again, that's a pretty decent little move on Facebook. Can it do that? Yes, of course it can. I'm going to be very excited to see how Facebook trades during Wednesday's trading session. But at the moment, don't get overly involved if you're not already in Facebook. Let the daily candlestick, of course, form. And then we can analyze this on the close of Wednesday and set the trade up on Thursday if in fact it's worth setting up. So again, there's a lot of nostalgia out there regarding Facebook. What's going on with Facebook? How is this possible for stocks to gap down on such positive earnings announcements? I just wanted to make this very, very clear because yesterday I had about 11 or 12 different students email me regarding what to do with this Twitter trade. And a lot of traders were actually considering getting into puts based on the open of the gap down. And to every single one of those students I responded to, I wrote back saying, look, that is incredibly risky. That is not how I teach people to trade stocks and options. I had to explain the reasons for doing that. Of course, I took into account the implied volatility in Vega, also associated, which would have been sucked out of those option premiums on the open. It was just a very, very risky thing to do. So I just wanted to put a video update out addressing what Facebook is doing after market close on Tuesday and what not to do during Wednesday's trading session. If you have any questions, email me success at pivotpoint-trading.com. Again, thank you so much for watching this video. I'm excited to see if a potential trade setup presents itself to us in the way of Facebook this week. All the best, ladies and gentlemen. Goodbye.